Hello everyone, it is Nicholas from Aussie MONEYMAN. So in this video we're going to be looking at my screen. As you can see, I finally have a webcam so you can see my face as well, hopefully the quality is okay. So basically what we're going to be doing is we're going to be going through everything I'm currently doing as far as my taxation and preparing for my taxes at the end of the financial year, coming up towards the end of the financial year, I should say, of the financial year 2021. So I basically spent the last 5 days or so purely working on my taxes, and I'll continue to do so for the next 6 days up until the 30th, so the end of the financial year. Now, I want to do this not only because it's going to offer a lot of value, but because creating like a sort of professional video for this sort of thing is going to be something that's going to take me a lot of time, and by the time I get around to it, it won't be as fresh in my mind. So I want to share with you guys what I'm actually doing. Now, it's very important to note none of this is financial advice, and this is not at all a suggestion that you should go ahead and do the same thing, but it may help you learn and be educated on what you can do. So let's just go through this bit by bit, and let me just tell you what I have been doing. So the first thing is just calculating my income. So I calculated my income, not exactly, because that takes a lot of time and work, but roughly, okay? And basically, that's the most important thing, because then I can work out all the rest of the things. So roughly, how much have I made? Next step is work out how much is actually going to be taxable income. So I have to gather all my expenses, everything from rates, depending on what your accommodation situation is, to electricity, to how much space your home office is taking up. You guys will know about that rule. If you're not sure, definitely look into that. So basically, if you're working from home, depending on the amount of space that your home office uses, that would usually affect, that's usually the method that's used to determine how much electricity, rates, internet, and all that you can charge. You can claim back on tax, I should say. So internet, travel, car purchase. I bought a new car. I use my car largely for business purposes, assets that I've bought, so to speak, or maybe assets not the right word, but just different purchases, like a new headset I've got, the webcam I've bought, many other things which I'll discuss later in this point here, all that sort of stuff. My costs of managing my tax affairs in the previous financial year, that is next financial year, looking at this financial year we're currently still in now, postage for all the giveaways and that I do, my website cost, depreciation costs on things like my desktop computer, all that sort of stuff. So that's all gathered. The next thing I do is gather other deductions that aren't just purely expenses. So things like GST, where I can claim GST, basically that's that. Superannuation, this is the biggest one and the way I reduce my taxable income the most, and this is why it's important to know my income and my expenses. Basically, the way I work this one out is I go and look at what the contributions cap is, the concessional contributions cap is for the financial year, which is currently $25,000. It will be $27,500 next financial year, I believe. Then I look at unused contribution caps, meaning basically if you have unused contributions within the last 5 years, this is the case at the time of recording this video, and you haven't used those, you can use those in future years. And I personally have around $20,000 to use, plus $25,000, and based on my income in the year and in my personal situation, it makes sense to put in, as I mentioned on my Instagram previously, around $46,000, and that will reduce my taxable income by $46,000 and will mean I pay 15% on that amount rather than closer to 40 or 50%. The next thing I looked at is the First Home Super Saver Scheme and property more broadly. A lot of you will know about the First Home Super Saver Scheme. This basically allows you to take up to $30,000, but soon up to $50,000 out of your super that has been contributed by yourself concessionally over, I believe it's since 2017, so over the last 4 years or so. And you can take up to $15,000 maximum and a certain amount of return on that amount from each financial year. So that was a big consideration when putting money into my super. And it's important to remember I'm currently 21. I've been putting money into my super since I was 18. So this is going to be very useful, taking up to $50,000 to put towards my first house, which I may well do. You guys will know if you watch the channel that property is something I've been considering, but I am skeptical of for a number of reasons. So that's that, and that's very closely considered to super, so the First Home Super Saver Scheme, or property more broadly, I should perhaps say. The next one is private health. So of course, after making around $90,000 for singles, and I think it's $150,000 for couples, although you'd have to check that, it makes sense to have private health because you'll still get the Medicare levy, but you won't get the Medicare levy surcharge. So depending on how much you're paying for your private health, your medical situation, all that sort of stuff, you can check out my video on private health, doing a deep dive into it. It may be worth having private health. I do have private health already. I reviewed that. Does it still make sense? The answer for me was yes. Next up, we have life insurance. Life insurance covers a lot of things. Life insurance itself, so that's basically if you pass away, trauma insurance, permanent disability insurance, and income protection. Income protection can be very good depending on your circumstances and depending on your income, because it can be a good way to reduce your taxable income. Just like super, that's the biggest one for me, followed by expenses, which I've just covered some of here, but there may be many more depending on your business situation, your employment situation, whatever it is. I mean, another one for me, because I was working outside for a long time in the past, was claiming sunscreen. You can claim that in certain situations. So all the deductions you claim there. Super's a huge one. Private health can be quite good. These sorts of things. The next one is holding my investments. So I reviewed all my investments and basically turn around and have a look and say, okay, is it going to be more advantageous for me to sell them and have them in this financial year, or to hold them and have them in the next financial year? And of course, in doing so, I have to consider if they're gains, if they're losses, how many gains and losses I have, my future expected income, which we'll get to here. Again, I've tried to make this into the best structure I can, but they all sort of interlink, and you'll see that as we go through it. I consider if I have gains, has it been over the 12 months to get the capital gains discount of 50%? Yes or no? All those sorts of things, opportunity cost, what I would otherwise be doing with the money, just all that sort of stuff. So that has to be considered, and that's what I've been doing. And the next one I've got here, and this is the thing that's been taking the most amount of work for me and the most amount of time has gone into, and that's reducing my expenses for later years, and researching for those purchases. So essentially what this means for me is two things. Not only am I reducing my expenses for later years, largely because I believe my future expected income will be less than this year by a significant margin, but also because there's a lot of other benefits. So let me explain in my specific circumstances what I'm doing. My income's already very, very large. There's a lot of things that I don't purchase because I'm a minimalist. For example, the biggest example I can give you guys, which you guys will sort of understand somewhat firsthand, is I don't go crazy for quality. Production value, having a fancy camera, doesn't matter to me. I've been recording on my 2017 $500 Google Pixel for the last 4 years, and that hasn't bothered me. My desktop computer's from 2013, my microphone's from 2013, and this webcam I only just bought. Now, due to my income this year and the fact that I don't think it will continue to be that in the future, and the fact I think this business is going to continue to grow, I think I will continue to run Aussie MoneyMan for many, many years into the future. It makes sense to perhaps buy things like a new microphone, a webcam, perhaps a new desktop as well. And it also makes sense because it's going to greatly reduce my income. Now, you can apply this to whatever situation you're in. Now, of course, there's the saying that even if you're being taxed at the highest marginal rate of around 50% plus the Medicare levy, let's say 52%, something like that, 48% to 52%, let's say 50%. Even then, it doesn't make sense to spend $1 to save 50 cents. But it makes perfect sense to do so if they're things that you're going to buy anyway in the future. And this is what I mean by reducing expenses for later years. I think at some point I was going to go ahead and buy a fancy camera. I think I was eventually going to go ahead and buy a new desktop. When? I don't know. Probably in 2023, I would estimate. So the next step for me is researching those purchases, and you can use the instant asset write-off for this. So I mentioned up here depreciation, but you can also use the instant asset write-off, which can be brilliant if you're in a situation like I'm in, or perhaps you will be in the future, or whatever the situation is. So this for me, for example, if I buy a desktop computer and I want to spend $2,000-$3,000 on it, I need to research, I need to make sure I make the right purchase, I'm not being ripped off, it's going to meet all my needs. Same thing goes for the camera, microphone, webcam, all those sorts of things. So that's been a huge point of concentration for me. I've also gone ahead and gotten some posters and some merchandise for Aussie MoneyMan as well, so I can have those basically in the back of my shots, and they'll be framed and very professional. And I think that has a lot of benefits, for example, making the shots and Aussie MoneyMan look more professional, which of course I want it to be. Now, the next one, again, as I mentioned before, is the future expected income and then structure. So what I mean by this is future expected income is very important for a lot of these things, but it's also very important for then your structure. So do I continue running the business as a company trust or individual? Do I go ahead and become a partnership? What do I want to do? Do I want to have a certain type of trust? I want to change what type of trust I am, whatever it is. And all those things I've mentioned in other videos matter a lot, understanding that can be a huge thing. It can be absolutely massive. So that's another thing that had to be considered. Alright guys, so that is pretty much everything I'm doing at the moment. As I mentioned, these are all things I've been doing prior to the actual financial year ending. Once the financial year ends and I decide to do my tax, that's very different. And when I decide to do my tax varies based on the circumstances. And this is another consideration, and this alone matters. So if you owe a huge amount in tax, let's say $100,000, and you can wait 12 months to put in your tax return with an accountant, for example, or about that, it might make sense to do that because you can have that money invested. You can be using that money for cash flow purposes. taxes, etc., rather than giving it to the ATOs, to the Australian Tax Office, earlier than you need to. However, there are other circumstances. For example, if I want to go into property next year, as a business owner, I need 2 years worth of tax returns, and in order to increase my borrowing capacity, based on this year being my best year so far as income, I might want to get my tax return in as soon as possible. So all these things matter, particularly, a lot less so when you're making less money. But once you start making a large amount of money, it matters a lot. Like just like the super thing, putting $46,000 into your super, that I think I worked out. I shared it on my Instagram. Instead of paying around, let's say 26, something like that, $1,000 on that $46,000, if had I not put it into my super, I'll be paying around $7,000 or $8,000 in tax instead. And then I can also take out a portion of that later, and based on my current super balance, even if I take out the $50,000 for the first home super saver scheme, if I never add another dollar to my super based on a 6% interest rate, return rate per annum annually, I will have around $1.6 million at 65. So when I reach preservation age, all these things have to be considered. So, you can see the benefits there. Now, I know a lot of people, for example, they say, well, I want to fire, I want to retire early, so it doesn't make money to put into your super. Maybe it doesn't. For me, it still does. So all these things matter. Like, as I mentioned, life insurance, income insurance, which is one of the 4 things considered to be a type of life insurance. That can be great depending on your circumstances, because you can claim the cost of that. If you have that income insurance outside of super, you can claim that on tax. So again, another way to reduce your taxable income. This is all the stuff I've been doing. The sort of point I was trying to get to when I mentioned things matter, like when you put in your tax return, is this is just the stuff I'm doing prior to the end of the financial year. When I actually put in my tax return, there'll be a bunch of other things I do, and I'll share that with you. The other thing to do is just check out all my videos I've already got on tax. I detail everything I know. Now, again, it's important to note this is not financial advice. I'm not a licensed financial advisor. I'm not formally educated in this. I just research it a lot, particularly more so now that taxation is a much bigger expense for me, proportionally compared to my other expenses. With that said, thank you very much for watching the video. Please do like and subscribe. You can support the channel using the Patreon in the description below. Feel free to shoot me a message, questions, all that sort of stuff. And feel free to share this video with someone if you think it will help them. Thanks so much for watching.